Welcome back to the Profit Boss podcast. Thank you for tuning in and listening. Today I am here with a solo episode to talk about the top 5 common tax mistakes I see with my clients. If you hear one of these mistakes and you think, oh no, I've done one of these, don't panic. I am always solutions driven and I've seen clients in all sorts of positions and there's always a way through and a path forward. The main thing is just to be proactive about this. So I'm going to jump in and tell you what I see commonly in terms of tax mistakes. Probably the number one mistake I see is that clients can sometimes avoid this area of their business. It's an easy one that because it's unknown and because it's scary, it is sort of easy to avoid and put your head in the sand and think, I'll do that another day. And I get it because as a small business owner, there is 10 million other things that sit as a higher priority. But it is a mistake to just go, it's a future problem. I'm not going to look at it. I'm not going to talk to someone. No. That is, not the best way to attack it. We don't want to avoid it. We do just want to tackle it head on. The probably number 2 mistake I see is clients not saving for tax. If you think about a payslip when you work for someone else, which I'm sure we all have, that payslip has your wages on it and the tax is taken out before it hits your bank account. When you run a small business, this is your job to look after your own taxes and they're not going to be able to be taken away. So we definitely do need to be diligent in our practices of saving that tax in a separate bank account, ready for that rainy day where that's going to be payable, so that we are making spending decisions with what's left over rather than not really knowing about how much eventually you will have to pay in tax. In Australia, I talk about with clients sort of the main 4 things when it comes to saving for tax to be aware of. The first one is income tax, and that's something that all taxpayers have to do. That's regardless of whether you work for someone or if you run a company or if you're a sole trader. Income tax is across everyone in Australia. And as a business owner, that is a tax at a certain rate, depending on your structure, that you pay on your profit. And I think that's maybe something that I talk to clients about quite frequently is that you're not going to pay income tax on every dollar that hits your bank account. It will only be on that profit figure, which is all your business income minus all your deductible business expenses. So if you monitor that profit that you're making in business and putting aside a percentage of that, then you're going to cover off on number 1, which is your income tax. The second one is GST, and this is payable once you're forecasted to or actually do turnover sales of more than $75,000 a year. And in Australia, GST is 10%. So everything you make, say you're a cafe and you charge $6 for a coffee, 10% of that coffee will go to the ATO in terms of your GST bill. The catch of that is that once you're registered for GST, you actually get 10% back for anything you pay for that has GST on it. So things like your accounting fees or subscriptions, or maybe you pay some rent, all of those bills will likely have GST on them, and that will help offset your GST payable on sales. But as a good practice, I normally say to clients between 7 and 10% of everything that comes in the bank account once you're registered for GST should also be saved for something we call a BAS, which is when you pay that GST. And normally when you get to that stage in business, we have the conversation about reviewing your pricing and being profit focused, because we do want to make sure that you are charging enough to cover that 10% that we can't change, that you'll pay the OTO now. And the next sort of 2 taxes out of the 4 are when you pay wages. So if you don't pay wages, you can skip this step, but if you do have staff, you're going to want to put aside the staff tax, so that's your pay-as-you-go withholding tax, and the super guarantee that's on those wages each week. Most people will be using something like Xero to do these wages, so look at the reports there, and I help my clients with this to understand that, it's the gross wage that you're sort of out of pocket for plus the super, and that's made up of saving the staff tax, saving the super, and then paying the staff member the net pay. So I'd say that is common mistake number 2 of not doing these saving strategies. The next common mistake I see is clients not claiming as much as possible. One of the best things you can do is have a bit of like a discovery call with your accountant and just go through things that you're paying for already that could be related to business. I think the more you ask, the more you're informed to know that you're definitely included everything you can, and just be open to the fact that it could be a no. So you could be like, hey, can I claim my gym membership because XYZ? It could be a no. So just like take that with a grain of salt. And the reason I say could is that it was just this week that we actually had a rescue paramedic who the ATO would allow us to actually claim their gym membership because they have to be fit to be able to do their job. So we always look into things. Like if you send it to us, we will actually look into that for you to make sure if we're saying no, we've got some supporting evidence to suggest that you actually can't claim that. And then on the flip side, we can find things that, yeah, we haven't included up until that date and make sure that they're included as a tax deduction. So that's probably a mistake I see, is that you're not sort of going through everything to make sure that it's all there, ready for tax time. So common mistake number 3, not minimising tax as much as possible. The fourth common tax mistake I see when I'm talking to new clients or maybe even existing clients that I've inherited is that they're not structured correctly. So when you have a small business in Australia, you can operate your business through one of 4 entities. The first one and the most common one is called a sole trader, but other options include a company, a trust, or a partnership. And when we talk about tax minimisation, tax deferral, and tax saving strategies, these are all different depending on the structure that you're using. And so it can be quite a severe impact if you're, let's say, structured as a sole trader and making profits of over $135,000 a year, when we could have you in a company paying less tax on the same amount of profits. So we're putting dollars back in your pocket by making sure that for your unique business, you're in the correct structure. And I think that's probably something that people can put off and make a mistake with because they're not getting advice around what's right for their business, their family, and their goals. And I think on that note, the 5th and final common tax mistake that I see is that clients take on the advice that they hear maybe in a chit-chat walk or at the barbecue or maybe what they read online. And I wouldn't take that stuff as gospel. It's always good. Even this podcast, it's educational intended. And really what's important is that for your business, you're getting the advice about your situation from a tax and asset protection purpose lens to make sure that you are protected and paying the right amount of tax. If you'd like some more information about your own business and what's going to be right for you, I'm always more than happy to have a chat. I'll have in the show notes our new client consult, and you can book in completely free and obligation free as well. Like I said, these are just the most common tax mistakes I see, and it's nothing to panic about or keep yourself up at night about, but my call to action to you is to be proactive. And if you hear something today and you think, I haven't quite been doing that, let's get it right for you so that you know you're on track. Thanks for listening. That's just a short, sharp one from me today. I hope you learned something, and just reach out with any questions whatsoever.